Prime XBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
Okay, everybody. It's Adrian, it's CryptoBirb here, and welcome to another show of mine from the entire amazing, beautiful series of our 14-day free trading congress, 200K celebration. The overall idea is to celebrate, with everybody, to kind of like give back to the community with as much value and knowledge as we can share, on taking this opportunity that I actually recently broke 200,000 followers. And right now I'm actually just about to break 240, but I'm still nowhere near as close as my special guest today to the popularity, to the fame in the financial world, everybody, because today with me, we are having my great mentor, person I always look up to, great investor, ladies and gentlemen, Mark Moss. How's it going?
Well, shoot, it's going great. I'm having a great day, and so I'm happy to be here with you guys. I don't know about that intro. I mean, you're at 200K. I'm a small fraction of that, but anyway, appreciate it, and yeah, happy to be here.
Yeah, no way, you're not just so small fraction. You're one of the biggest YouTubers in the financial space, if you ask me.
Yeah, I'm over there. Yeah.
that is hats off always. And whenever I just watch, so many streams, so many videos actually of yours, that was always like 11 out of 10 quality. But we are going to move to that in a second. Today's topic is to touch briefly upon the fundamentals of Bitcoin. Because the truth is that each and every single market is always dynamic. There is not a thing that is static like on this planet. We cannot really stop the time. We always have to kind of like just catch up with everything, which is why things are dynamic, which is why things keep constantly changing. There is not a single moment that we are enjoying, like this very second we're talking, that is the same like it was like a second or a minute ago. And for that very reason, everything changes also on the markets. And discussing the fundamentals of Bitcoin and, let's say, the entire crypto space, or focusing mainly on Bitcoin, we want to understand what is new, what's changed, and, potential directions with our amazing guest, Mark Moss, once again. So, Mark, tell me very briefly, what's changed in your opinion, like since this year started?
Yeah. A couple things that come to mind right off the bat as you were kind of talking about that. One thing that's inevitable is change, right? You talked about that change. The one thing that I would say, and it's actually something I've really been focusing on a lot lately. I'm working on this big thesis, but when you look at change, really, most people think in terms of like linear growth. But there's linear growth and there's exponential growth. And so as humans, we typically think in linear, like things happen like one step at a time. But some things, like new technologies, like Bitcoin, for example, don't move in a linear fashion. They move in an exponential fashion. And so they move way bigger and way faster than we may ever imagine. So I think I want to break that kind of difference out. Also, some things are cyclical, meaning that they repeat over and over and they rhyme, kind of a thing. So I think when you look at change, you want to look at like repeating change, linear change as growth, but also exponential growth. And they all kind of fit in a little bit. So what I would say first off is what's changed is, we're seeing cyclical, we're seeing a repeat of a pattern. We're seeing a cycle repeat out in itself. And so the cycle that I'm really seeing play out is it's as technological revolutions. There's technology cycles, and we had in the 1700s we had the Industrial Revolution that changed humanity. Like it wasn't just a new technology; it was a revolution. It changed all of humanity. We had steam engines and steel. Like all of a sudden, from bricks we could build 2 or 3 stories. Now we had steel. We could build skyscrapers and bridges. It changed humanity. We had electricity. We had automobiles. For all of humanity, people walked and rode horses, and now we had cars. Right? We had the 1971. We had the microprocessor. And right now, if you're keeping track, that's about every 50 to 60 years, there's a technological revolution, and we're at the verge of another one right now. And so I want to kind of break that out. And the reason why that's important to understand is that the way technology or technological revolutions, the way the cycle plays out is always kind of the same. And so you want to understand that to understand where we're at right now and where we're going. So an example of that would be, let's not go too far back. Let's just go back to the automobile boom. The way it works is that you have this brand new technology and it's going to change the world and everybody's excited about it and everybody rushes into it and everybody's building on it and there's all this excitement. But what happens is, it gets too far out in front for the market. There's no market to support it and there's no infrastructure to support it. So let me give you an example. In the automobile boom, we had the Model T and we had Henry Ford created the production line, the assembly line, and all of a sudden everybody wanted an automobile. It was the hottest thing in the world, and then all of a sudden there was 100 automobile manufacturers. But guess what? The market and the infrastructure couldn't support that. There weren't enough people to buy from 100 auto manufacturers, and there was no infrastructure. There were no roads for the cars to go down. There were no gas stations. There was no mechanics. Like, the market couldn't support it. So what happened? They all went out of business. You ended up with 3 automobile manufacturers, Ford, GM, Chrysler. And then eventually the market came back. We could see the same thing in the internet boom. All of a sudden in the late 90s, we had the famous, webvan.com and the pets.com. And they weren't wrong. Like eventually everybody would buy stuff online. But in 1998, I think less than 5% of people had ever bought anything online. So the market wasn't there, but also the infrastructure. The internet was too slow. It just didn't work good. And so you can look and see how these patterns repeat. And then you can look at the growth and see that it's linear and exponential. Does that make sense so far?
Yeah, it does. It really does. I'm all ears.
All right. So if you want to ask any questions about that, now we'll start looking at in regards to Bitcoin.
Yeah.
So what I'm seeing is that we have another technological revolution. And what that revolution is that it's a revolution to decentralized technology. And so there's another cycle that I'll layer on top of this real quick. Sorry for going backwards, but we also have, that's a technological cycle. We also have like economic cycles. We have political cycles, political being like societal, like people. And so we have this other cycle where the world goes from individualism, decentralization, to globalization, centralization. And so it's an 80-year cycle. So the last time we were there, we were in at the end of World War II. That was the end of the me individual cycle. And at the end of World War II, we had the creation of the UN, the IMF, the Bretton Woods global monetary system. All those were created right there in the 1940s. 80 years later, we're right now, I think pretty arguably anybody could tell that we're at peak globalization right now. 2030, you'll own nothing, you'll be happy. World Economic Forum, World Trade Organization, World Health Organization, the IMF.
That's what I wanted to bring.
And all those things. So we're at peak globalization or centralization. But again, what does the cycle tell us? Well, the cycle tells us that we're peaking and now we're going to start swinging back towards decentralization. And of course, we can see this. There's populist uprisings in countries all over the world. People are rejecting globalization. And so you layer that at the same time as we have a new technology, a technological revolution, which is this decentralized technology. So it's a super powerful trend that's building right now. So you take that.
That's very right.
Yeah, so you take that, and now where does this put us with Bitcoin? So understanding how these technological revolutions pull out, plus the catalyst that we have with change, I see the same thing happening with this decentralized technology. Everybody thought it was the best thing in the world. It's going to solve every problem, and it's going to be supply chains, and it's going to be hospital records, and it's going to be this, and it's going to be that. It's going to be all these things, kind of like webvan.com and pets.com and all those things. But the problem is there was no market to support it, really. There was no infrastructure to support it, really. And so it wasn't wrong, but it might have been too early. Eventually, everybody bought pet stuff online. It just wasn't then. And so I think we're seeing the same thing play out, right? People are expecting too much too soon, right? There's a lot of excitement there, but we're starting to see that change. And so back to kind of where we're at, what's kind of changed. What I'm seeing is right now the infrastructure and the market is really starting to develop. So when we go back, if we want to look at like 2017, that's where we saw really that hype phase. Everybody wanted to get in, but there was no infrastructure to support that. But today there is. And so, for example, just yesterday, an announcement came out, which was NYDIG, is like one of the largest financial institutions in the United States. They run the back end financial services, I think, for 300 banks. So banks who, run their checking and savings and wires and all that, they use a service provider basically for all of that technology. And NYDIG runs the back end for like 300 banks for I think it's like 30 million customers. And so they said yesterday, we're going to give all 300 banks the ability to buy and sell and store Bitcoin. Boom. That's infrastructure. That's a super highway going right into a town that didn't have a highway before. You see what I'm saying? So now
it's very interesting.
Yeah, so it's the infrastructure. So if you think about infrastructure, think about building a city in the middle of the desert, but there's no water, there's no roads, there's no electricity, right? So you have to build those things, and eventually, when you build those things, the city builds up. So I think that is the biggest thing that we're seeing is the infrastructure is finally being built.
That's very right. It's actually very funny. Sorry, Hercules. It's very funny that you're mentioning, this city in the desert. I recently went to Dubai, for a couple of weeks. And this definitely feels like that, like there was literally like just sand at the bay, right? Sand at the bay. And apparently, within a couple of decades, like this entire city arose, right? And again, I think this overall trend, this global tendency towards globalization and centralization is what selects what kind of like just pumps, let's say, very selected countries and places on the planet. You're not going to see definitely anywhere like equality with regards to the growth, to the economic growth, right? This also comes with the natural resources that are also beneath the ground that are the basis for the growth for any cities. But again, regarding the globalization, before I let Hercules also ask a very quick question, probably. We cannot talk about this globalization without, we shouldn't talk about globalization without understanding who's in charge, who's in power, right? And just like you threw a couple of names like this World Economic Forum, right? This World Health Organization, or just this Klaus Schwab and who not, right? And it always comes with somebody like to manage that all. So the question is, because people believe that whenever something is globalized, it's very common, right? That it's like democracy. People think that democracy is kind of like managed by itself, but apparently it's really not, right? Otherwise, we wouldn't have like the presidents and other like prime ministers and again whatnot. But Hercules, go on. I interrupted you.
No. It's okay. It's fine. I was about to say, because Mark, you mentioned this institution that you mentioned that they have this service for 300 banks, and I think that the institutions and banks actually realize now, because we had the infrastructure back in 2017, not at that scale, but I think they also realize that they have no other option but to
That's a
go
good point.
with
That's
crypto.
a good point. That's a real good point. So it's kind of a two-part, right? Like obviously the infrastructure won't be built unless there's demand for it, right?
Exactly.
So no one's going to go build roads and gas stations if there's no one driving cars, right? So it's kind of like a chicken or the egg kind of deal. But kind of to your point, I like that point, and I was actually thinking about that yesterday as I was working on this idea. And that is that it only takes a very small minority to enact massive change. And so, in the United States, for example, people didn't want hormones to be in the milk anymore. And so all of a sudden, quickly, every milk now says, hormone free. Or people wanted kosher foods, and now all the food, or they want gluten-free foods, and now all the stuff gluten-free. And it only takes, and I forget the exact number, there's been studies done, it's about 15 or 18% of the population to enact the change. And so to your point, Hercules, the people have spoken, the people want it, and the banks, and actually in the report I was reading, the banks actually said, we noticed that too much deposits are going from the bank account to exchanges like
Exactly.
Coinbase and Gemini. And if we don't offer it, all the money is going to go over there.
They just lose the opportunity, right? Don't they? But yeah, with regards to this to these global tendencies, I also want to ask, because globalization is one, right? This is something that we can barely impact. Well, we are influencers, so we by hosting, let's say, those tradings, trading congress, or by what you're doing, Mark, with your amazing YouTube channel. I think we are really trying to bring this positive influence and this positive impact, and perhaps, just like you were saying, just be this spark, that would ignite this 15%, let's say, to change for better at one point, right? That's what I'm personally hoping for. I'm not sure if you agree, but from the financial perspective, again, those are the streams, the tendencies, that you cannot really influence directly, but you can still profit from them, right? You can still play them, you can still invest, right, and just collect some profits out of it. So that is my question. What fundamental, let's say, what fundamental measures are of biggest interest to you? Is it macroeconomics? Is it like, interest rates? Is it inflation rates? Like, so producer price index, right? Or whatnot? Are there economic measures? Are those crypto-based measures? How is it for you?
Yeah, so there's a bunch of them. And so obviously, you can look at this from your shoes, right? As a trader, for example, you have a bunch of indicators that you could use. And that could be your RSI indicator, or your Fibonacci lines, or your MACD, or whatever you want to use, Ikimoto cloud, or whatever, right? So you have all these different ones. And then you could build your own custom ones, whatever. But you know that you would never just trade off of one single indicator. So what you're really looking at is a bunch of indicators, and then like, what's that overall picture that it's giving you, right? So you'd look at all those different indicators, and where's the moving average lines and all this thing, where's the volume, and like all those things, right? And also from a macro perspective, you'd also look at the exact same thing, right? So like, where's the market, where's the demand, what drives this? Like you said, what are interest rates? What's happening with inflation? And so you would again look at all those different indicators to try to get an idea of where that's going as well. Now, kind of to your point, what are my favorite indicators? I'm more of a long-term macro picture guy. I think that it's easier to see the future than it is to see the short term. So I feel pretty confident of where Bitcoin would be in a couple years. But when somebody asks me, should I buy now or should I wait? What's going to happen over the next couple of weeks or month? I'm like, I don't know. Right? I don't look at it at that level. I'm looking at it like where it's going to be in a year from now. But again, it's the same approach, which is look at multiple data sources to try to draw that picture. Does that make sense?
Yeah, it does. It really does. And well, as a matter of fact, from my personal investment point of view, trading point of view, no matter how we call that, what is certain, only it's printed on the left in the chart. What's in the past, as a matter of fact, right?
And
You
it's
can
easy
never be
it's easy to
certain.
trade from that, right? Yeah.
It's always kind of like, easy to predict in hindsight, of course, but that is out of question. The only thing that is certain is what we know so far, right? What already kind of like happened, although, well, we never know the real truth. Apparently, what
Yeah.
media say, it's not really the same. But most importantly, again, from the pure trading point of view, there is uncertainty in the future. And this uncertainty is a source of a risk, of a financial risk, right? Which is the size of the capital that we may lose in case of a wrongly made decision.
Right.
And what we as investors or as traders, really want to do is to try to find the most likely, the most logical kind of like a result, right? Made out of the current, let's say, inputs, right? You observe the media, the indicators, let's say what the Fed is doing, with Jay Powell, for example, with the interest rates, or what they are doing with the inflation. They recently just said, they're going to boost the inflation, then to later tackle it down. But I personally don't believe they're going to tackle it down, because it's sort of like a one-way route, it seems.
Yeah.
But all of it just brings this entire variety of inputs, which constantly changes, which makes it so hard, even for the artificial intelligence based tools, to kind of predict anything, right, in future. There's always some confidence bands, some probability and statistics that may work in your favor, or so that you kind of like try to force those numbers. But if that is the case, right, that it never works, then before I move to another question to Mark, this is a quick reminder for everybody to make sure that you guys press a thumbs up on this video. Just make sure you put some comments for Mark, for like any questions you may want to ask Mark. We're going to make sure to cover some of them at least. Make sure you're subscribed to this channel as well, right? This is definitely what's helping us pump the YouTube algos and just get the videos to the spotlight that it deserves. And
one
more
point here. We have a special giveaway. Probably you saw, Mark, we have a secret code. They can click on in the description. We have the link in the description of the video. So we have a giveaway, 1 month free Nest Club exclusive access for 1 month. So they can unlock, we have the secret code, they can unlock the giveaway, and they can get into the draw. We have a few questions. I don't know if you want me to go through the questions from the audience, or if you want.
Let's focus very quick. Let's focus very quick on the main questions. Then we're going to give a space for a couple of minutes before we end, to actually rally and flood Mark with all those questions from the public. Mark, this is what I personally want to kind of like ask you right now. We approach the markets kind of like from two different layers, two different perspectives. You are a fundamental investor. I'm more a technical guy, right? I try to, let's say, quote unquote, predict the future by looking at the candles, by staring at the charts. You, as a matter of fact, just try to find the intrinsic value and understand what actually may happen, like between the demand and supply fluctuations.
Exactly.
And those may at times bring us to, well, best if they all align and bring us to the very same conclusions.
Sure.
But I want to very much ask you, what do you think about the current stage of the Bitcoin market as a whole from the fundamental perspective?
Yeah, I mean that's a great question. So that's where I like to look. So I like that you asked that. So I look at it. It's kind of like Bitcoin is still. We talk about like what are the fundamental drivers? Typically, an investor would talk about fundamentals more like what are the cash flows and profits, and obviously there's none of that. But we're looking at like news-based kind of sources that drive, as you already said, the supply and demand. And so what I would look at is because it's still somewhat of a speculative play, kind of like if we were venture capitalists in Silicon Valley a decade ago, and I was talking about this new app that was going to get you a car and a ride wherever you wanted to go. We've never seen that before, right? And it's going to connect you with other drivers, and it's going to be like this best app. And I'd say, and I'm trying to raise $100 million. And you'd be like, I've never even heard of this before. Where did you get that number from? And I'd say, well, if I can pull this much from the taxi industry and this much from the limo industry and this much from the bus industry, it could be $100 million. And so that's kind of how we have to back into it being that speculative play. So we'd look at Bitcoin and look at what markets is it going to pull from potentially, or is already pulling from. So for example, we've already seen all the big banks, JP Morgan, Citibank, they've already come out with guidance and said it's going to overtake gold. Okay, so that's 13 trillion right there, right? It's also, Bitcoin's been called a Swiss bank account in your pocket, right? So Swiss bank accounts have typically been the best place to store your money. The problem is the United States IRS and the Fed has gotten so big that Swiss bank accounts
They're
don't
not
really
so
work
happy
anymore.
about that.
And now we see Russian oligarchs losing $500 million in their bank accounts, things like that. So Bitcoin's definitely a better offshore bank account, but there's about, right now today, about 30 to 40 trillion dollars parked in those. Okay, so could we get part of that? Could we take 10% of that? Well, that's another 5 trillion on top of that. But what about the bonds markets, right? We have about $300 trillion of bonds that are basically earning nothing. As a matter of fact, almost $20 trillion of bonds are actually negative yielding. So could we suck in 20, 30, 50% of those trillion of those? I think so. And then what about, if you really understand money, you understand that at the end of the day, money is like stored energy. So I work digging holes for 8 hours a day. I earn enough to live on. I could decide to work an extra 4 hours and store that energy to be used at a later date, right? It's stored energy. The problem is when I'm storing that energy in dollars and it's losing value because of inflation. So what happens is it forces people to not just be the best brain surgeon in the world. Now I have to be an investor. But what if I could store it in a place that didn't lose energy, like Bitcoin, that didn't have inflation? So now I don't have to invest in the stock market. I don't have to buy real estate. I don't have to do that. So we could pull some from the real estate market. We could pull some from the stock market. And all of a sudden, it gets pretty easy to see how it could be worth a few $100 trillion. I mean, it's pretty easy. Now, that's a big number, and I know that's hard for a lot of people to understand. So let's back it down just a little bit, right? So we have, as we've seen, S&P 500, Fortune 500 companies are now, they're sitting on huge stockpiles of cash, a lot of these companies, and that's their treasury reserve. Because that's like a melting ice cube, it's losing value, they're forced to invest that money. And so what a lot of them are starting to do now is take some of that treasury reserve and move it into Bitcoin. MicroStrategy is the famous one. They've moved all of it in. We've seen, Square move some of it in, Tesla, some of it in. But we're seeing more and more. Mr. Wonderful Kevin O'Leary from Shark Tank, he said he's put 3% in. He said that every company he consults, which is thousands of them, he said that they should put 3 to 5% of their treasury in. Kathy Wood from ARK, she's the woman on Wall Street. She's crushing it in the tech space. She said that she thinks that S&P 500 companies should put 10% of their treasury into Bitcoin. And if just that were to happen alone, it would push the value of Bitcoin up to $500,000 a coin. Just that alone. So all of a sudden, it starts to get pretty easy to go, shoot, that could happen in the next 2 to 3 years. Like it's already happening. Now back to the infrastructure. The reason why it's been held back is most companies aren't able to do that legally. In their bylaws, the mandates don't allow them to do that. Also, there's not institutional grade custody, things like that. But now with these announcements that have come out, there is. Now the infrastructure is there that allows these companies to even do that. And I think over the next couple of years, we're going to see this. So, I mean, to see $500,000 in the next couple of years is not that much of a stretch, and eventually 200-300 trillion, maybe in the next decade. So I think it's pretty easy to see how that works when you're looking at that long-term picture.
That's actually funny because we are talking about quite some big numbers, and right now in front of me I'm having quite a big number chart. Okay, and for those who don't know, this is M2 Money 2 stock. Well, the entire supply of the monetary kind of like just units in the circulation, and we are looking at the official records, and the official records from Fred. Well, what you can see that is outstanding is pretty much like this very short. Okay, if this was a price chart.
Should we add your screen on the webinar, on the live stream?
Nieoznakowani w okolicy. Volkswagen.
No, there you go. I think it was added. No, it wasn't added.
We see it now.
Yeah, we see it now.
That's very strange. But okay. Yeah. So what I'm looking at again is this very influx, right? This very influx of this injection, should I say, right? A popular word right now. This injection of money that was poured in like a helicopter money, to cope with the black swan, right? With the black swan and with the ultimate crash that we had. I can hear Mark laughing probably right now.
Yeah.
But this is pretty insane. Like knowing this entire history, if you look at it, at least from the available records right now, we had the largest price, not price, but the money to aggregate kind of like block, just literally push down the throat of people. Like they were literally pumping this market with the money that are still being printed, if you will, right? Just have a look. It's still soaring for the curve, but it's not even slowing down. It's not seeing any slowing down, which tells me that again that there is a matter of inflation. There is a matter of an inflation which is not even the inflation that is let's say official, right? The official interest rates that the Fed and the overall global, let's say, economies tend to promise is around 2.25% of real inflation that is supposed to provide like some sort of like a stability and sustainability to the economic growth of the countries. But the truth is, the real inflation is so much bigger. Right, so much bigger because you can see that in the prices. You can see that in the prices of commodities, which are very strongly correlated with the inflation. As a matter of fact, to the best of my understanding, it's the actual commodity demand and commodity prices increase or boost that very strongly correlates and results in the in monetary policy being kind of like pressed with bigger inflation. So long story short, what I'm thinking is the inflation, in your opinion, ever going down, or is it just a one-way ticket?
Yeah. You're asking me what I think.
Yeah.
Well, I think inflation is a very nuanced argument, and people get caught up in this inflation and deflation and this and that. And I think what you just pulled up on that chart is probably the best way to look at it. Because really, like inflation, think about like a balloon, right? It's inflating. The amount of money is inflating. And so people think about inflation as like the prices. And so in the United States, we use the CPI, Consumer Price Index, which is what the government uses. That's a political tool. They constantly adjust that number to make it show whatever they want to show. We know lumber and steel and concrete and used cars and milk and steak, gasoline, they're all up massive, right? So it's almost like the media wants to tell you what you're seeing with your own eyes is not what you're seeing. Like, I just went to the gas station, gas is double. Oh no, you didn't see inflation. No, that wasn't inflation. So the problem is that inflation shows up differently in different places. It goes to the most scarce asset first: beachfront property, lakefront property, Bitcoin. Like the most scarce assets are going to benefit the most. Property in Texas, everyone's moving to Austin, Texas. There's a lake there. There's only so many houses on the lake in Austin, but yet all these Fortune 500 companies are moving there. These CEOs of these companies make $50 million, right? What do they care if they pay an extra $1 million for the house? So guess what's happening to those prices of the house? In 30 days, they're jumping $1 million. It's scarce. But property in Kansas, that's not going up anywhere as much. So the scarce assets first. So anyway, back to your point, I think that chart's the best way to look at it because that's the money supply that's increasing. Where the inflation shows up is definitely different. Now, to your question, will that continue? It's going to continue as long as it can until it can't anymore. And so what do I mean by that? Well, the governments, especially the United States and the Fed, but also with the Euro, the ECB, I mean, they're at a rock and a hard place. If they don't print money, the whole system collapses. No entitlements are paid, no pensions are paid, no welfare. The whole thing's done if they don't keep printing. But if they do keep printing, then we see massive inflation. The whole system crashes. So it's really damned if you do, damned if you don't at this point. And so I just think they have no choice. They're gonna, what I call it, they're gonna go pedal to the metal until it blows. And but they're also fighting deflation at the same time. And so this is where it gets interesting. And so and this is probably deeper than we want to go into at this point, but you could ask me a question if you want, but they're fighting natural law. So what do I mean by that? Gravity is a natural law. You can't get around gravity. Now, I could, with enough money and technology, I could suspend gravity temporarily, but I'm always going to have to respect gravity. Well, natural law is also deflationary. Human ingenuity. I used to carry wood one piece at a time. Then I invented a wheelbarrow, right? I used to buy 1,000 DVDs for $25 each in my house. And now for $5 a month, I just stream it all. So it's naturally deflationary, right? The goal was for us to work less. The goal was I had a robot cleaning my house so I didn't have to spend half a day doing it. That's deflationary. But what the Fed, what the central banks have done is they've created an inflationary system. They're fighting natural law. At some point, natural law, gravity is always going to win. And so I think it's pedal to the metal until they blow, inflationary. But then eventually that deflation comes into play. And that's a good thing. And that's a hard thing for people to understand. It's a good thing. The transition won't be nice, but eventually we should be working less. Eventually, I mean, think about this. The cup of coffee went from 10 cents, 30 cents, 50 cents, 70 cents. Now it's $3 for a cup of coffee. Do you think that with technology, it's more expensive to make the coffee now? Shouldn't it have gotten cheaper? Shouldn't it have gone from $3 and now it's 10 cents? And then I just ask people the question, like, would you rather your money buy more goods and services in the future or less? And of course, the answer is less.
Yeah, that is actually very powerful statement, or should I say just a logical conclusion, that the natural laws are sort of like deflationary. And I fully agree. We as a humankind, as a civilization, kind of like from the technological point of view, we keep advancing, we keep, improving, we keep optimizing, we keep, just boosting, everything right now with the machines, with artificial intelligence and whatnot. And yet, if we were to pay, or buy an iPhone each and every single year, we would pay, about 20% bigger price, each and every single year that we want to get it, right? Which is the very big paradox. Well,
but to that regard, that iPhone is advancing at a rapid rate, and we're paying almost the same price for double the technology. So really, that's even deflationary. Where I could go buy the 5-year-old iPhone for $50, right? And that 5-year-old, I don't know, but that 5-year-old iPhone has more technology than the computer that was used to put the man on the moon.
Yeah.
Right.
Yeah.
And how much did the technology cost to put the man on the moon? Right. I don't know, billions versus an iPhone. So to your point, but if you look at, I mean, so yeah, the advancement of the iPhone is rapid, it's massive, and the cost is very incremental. So you kind of have to look at it a little bit different. But look at the TVs. We just got I think a 70-inch flat screen LCD TV for $400.
Oh, really?
Yeah, it was like $450.
Send me over one to Poland then. If it's $400, just send me over. You're rich. Come on, Spurs. Yeah. But I really know what you're saying. I mean, with regards to the iPhone, this was perhaps like an unfortunate example, but the overall concept is that, again, we like the overall advancement, right? The overall like technological progress is deflationary in its nature. It's still, again, the inflationary policy, the inflationary monetary policies that you see across the planet are exactly what is in my opinion, the biggest cancer of this entire game, which ends with nothing else that with bubble burst, because the currencies, apparently the fiat currencies, be it US dollar or any other fiat currencies, are, as a matter of fact, nothing else but just the balloon, right? The moment that it kind of like started, being separate away from the gold standard. From 71, as far as I can recall, with Nixon. This was the moment that the currency started inflating. And this currency inflation is, in my opinion, kind of like a one-way ticket. And the only way that it can end is like this new, like this World Economic Forum, which you said, this 2030 agenda, that this transition to a new monetary system, we're going to have like full invigoration, full digitalization, digital currencies only, no printed cash. It's already being spread that the cashless payments are really suggested in the shops because viruses, bacteria, and other stuff.
Yeah.
So there is some repetitive.
Think about what you're saying right there, right? So earlier we kind of talked about what are some of the drivers of Bitcoin that will drive value to Bitcoin. Well, so you just talked about how they're taking over the money with their central bank digital currencies, and we know how they're going to use that to control the people, right? It's going to be programmable, it's going to be behavioral, things like that. So I think that's a good thing for cryptocurrency. It's not a bad thing. I think it's a good thing. And the reason why is, as you know, so many people think that like, oh, well, it's not real money if I can't hold it in my hand, and I can't trust that crazy internet money, right? But all of a sudden now the central bank is going to give you a cryptocurrency, which is going to normalize it. Oh, well, okay, I guess I'm using it now. And then they're going to compare it against Bitcoin, which is open source, permissionless, trustless. And so it's like, oh, well, now I'm used to these digital crypto money from the Fed, but why is it always going down when Bitcoin is always going up? Why is it they're controlling me when I can be over here uncontrolled? And so I think there's, $90 trillion of US currency. So how much of that 90 trillion finds its way over into Bitcoin? So again, that's just one more catalyst in my opinion.
That's right. I mean, whenever you keep printing those money and the value, let's say, of the asset appreciates, like we can see, you and I, we are big fans of silver. I hope nothing's changed on your end though. But we should be big fans of silver in this inflationary economy, in this inflationary boost that we are seeing. And it does seem, it seemed so many times. Let me actually bring this very chart just very quick. Let's hope, guys, you are going to be able to see this. Okay, just have a look. This is one of my favorite charts. Before we go and spare us a couple of minutes on the next questions. This is Bloomberg Commodity Index. Okay, and no matter how you look at it, well, if you look at it from the fundamental point of view, or as I do look at it, from the technical point of view, what we are seeing here right now is the first time, like this very case right now of the price, let's say, or not even the price, but the index. This is the Bloomberg Commodity Index futures. So the price of this futures contract is, as a matter of fact, for the first time, well, it's already broken out. For the first time ever since, I believe, 2012. That it really,
I'm not the technical analyst that you are, but even I can see that that's a big breakout.
Exactly, right? Yeah. So the main conclusion is, guys, we are probably looking at the commodity index and the commodity industry as a whole. We are probably looking at the very, very start that nobody is even talking about it just yet. We are talking about the start of a multi-year long bull market on commodities. And bull market in commodities where about 20%, which is 1 out of 5, 1/5 of the entire impact on the commodity market comes from precious metals, which is gold mainly and silver, right? Somewhere like 15 to 5 ratio. So we are looking amazing. We're looking at an amazing, let's say, chart coming from silver as well. Just very quick, okay? This is, in my opinion, like, Jesus, this is must be one of the best looking charts in the entire market right now. Like, no matter how you look at it, or let's say trend lines, no matter how you draw this, long story short, this entire period was a couple of year long accumulation. It lasted for 6 to 7 years. And right now, from the long-term point of view, we really broke out and kind of like consolidate for the past year, right after the accumulation zone. So knowing that the accumulation zone is always what happens after the bear markets, and it's always what starts.
Pull up the gold chart real quick.
Yeah, let's go. That is pretty much like very.
That's because gold's breaking out big right now.
Really? Did it? Oh yeah, nice. Looking nice. I was actually supposed to buy today, but it didn't manage in time. But that's looking really good.
That's not a financial advice.
Well, this almost is a financial advice. It's looking so good. Like,
well, and it makes sense, right? The commodity index is a great place to look, and this is what I've been repeating. And you pulled up earlier the money chart, right? So when they print an unlimited amount of fake fiat counterfeit money, people are going to take that to go buy real, hard, tangible assets, commodities. And so the more fake money they print, the more real things that people are going to try to exchange that for. And so that's why the commodity chart is blowing up.
That's
And
very
of course,
wise.
it's and of course in the equation is the inflation and correct me if I'm wrong. If governments print out of thin air, then they will have to take it back somehow, right? So they will tax people even more in the future.
That is,
I mean, that's their plan. That's their plan. Like these MMT, modern monetary theory theorists, I guess we call them. That's kind of their plan. Like, it doesn't matter how much fake money that we create. We'll just put as much as we in. They imagine it like a bathtub where they could fill up the bathtub with fake money. And then when inflation gets too hot, they pull the drain at the bottom and then they drain some of it out. And they think they can control it. I think otherwise, but yeah.
No, this is somehow, I think this might have to end at one point with the hyperinflation, the moment that it actually just, the control is lost. But one way or another, let's quick talk spare very 2-3 minutes discussing this very chart, NUPL, okay? This is, somewhere between technicals and fundamentals, if you ask me. It corresponds with the on-chain analysis. But this chart tells you about the net unrealized profit and loss. And it refers the unrealized profit in this very context to the entire market cap. So unrealized market cap to the market cap as a whole. And it tells me that the entire kind of like index right now, this ratio is somewhere between 0.6, 60, 62, 63, something like this. And this tells you that 63% out of the entire capital, the entire market is pretty much like being unrealized. And if you look at it, this, for the entire history of Bitcoin, since its very origins, this very, green color, fancy looking color, we like green, right? But in this very context, this always is associated with some, suggestions and tips from the market itself to take some profits, to keep realizing those profits. Whenever we invade this territory between 0.5 and 0.75, okay, because over 0.75, you can tell that this is actually euphoria and greed, which usually comes associated with the market peaks. Okay, market peak, euphoria peak, euphoria peak, local market peak as well, like at least. Final market peak 2013, and the MT Gold starts in 2017. So it does seem to me, from this kind of like a looking at it like from the on-chain perspective or technical, fundamental, I guess it's some sort of like a mix. You can tell that we are in the very, should I say, major part of the market cycle, if you ask me. What do you think about it, Mark?
Well, again, right, there's a bunch of indicators to look at. So this is one. You don't want to look at it in isolation. To that point, I think a bigger one is, you can look at the halving cycles of Bitcoin. And so it seems like there's usually a market top somewhere about 18 months after the halving cycle, which would put it somewhere like September, October-ish. To this chart that you're seeing, as you can see in those previous green areas, sometimes that green area goes on for quite some time. So potentially we could see that green area extend out to September, October-ish, which would then coincide back to that 18 months after a Bitcoin halving.
That sounds very logical and reasonable. And basically, on top of that, this is exactly what I'm also kind of like just understanding from this information. Again, this the way I read it is like a slow profit taking from those early investors, right? This is not really like a euphoric stage of the bull market. But if I were, let's assume this is entire entire bull market of this cycle, let's say. But just on the example of this 2017 one, if I were out of this entire cycle, if I were to put a dot or a highlight somewhere that I think that we are at right now currently is, guess what? If you even try to navigate it, it would put you somewhere over here, right? Which still seems quite reasonable, taking into account that we've been in the bull market for the past 3 years, as a matter of fact, almost, right? Since the December 2018 when the reversal occurred. So it's quite some time. And for those who, again, are watching that, kind of reminded to subscribe as well, but we are late. We are not new to this market. Right, many people are joining and they've never experienced the bear markets, but there is not a question thing that a bear market is going to come. And what I keep warning people about is that if you are joining right now, your time is shrinking. You have not much time left, right? Because whatever happens historically, again, and the history is the best teacher apparently to the people, although we never listen to that, is well, that we are placed somewhere in the market cycle, somewhere exactly like it shows, somewhere this. It doesn't mean, let's say, it's perfectly this very top or this is the very bottom. It doesn't matter on the macro scale. What matters is that we are here, but not here or here, let's say. So knowing the market context is exactly what can save you so much money. And just to kind of like give the final thought about that, very quick, Mark, from you. If we were to maybe not pinpoint, but just you're saying September, October for the market reversal, what is your main tip, for the people to prepare for this entire Q3 that is coming, on how you are managing, or how you would suggest people could actually, take these profits? I personally keep buying gold and silver. What is your take?
Well, I do like diversification, and I know a lot of the true believers in the crypto and the Bitcoin space, all in and sell everything and buy it. For me, I've unfortunately, once bitten, twice shy kind of a thing, and so my story is that I got wiped out in 2008 in real estate, and so coming back from zero is difficult. I don't ever want to do that again, and so the reward of being all in and getting it right isn't worth the risk of losing it all. And we know back to 2017, I mean, the market drew down 80, 90%. Like, I don't want to live in another 80, 90% drawdown. I will with Bitcoin, but I don't want that to be 100% of my net worth. And so to your point, yeah, I think a little bit of gold is insurance. I look at it as insurance on my portfolio. So I like to have some of that. For me, I'm big into buying cash flow, right? We were raised in this world that says, go to school, get a good job, save for retirement. That doesn't work. It never worked. Like, nobody wants to live off savings. Now, everybody should have savings, and if you need it, you live off of it. But you want to replace that income as soon as possible. And so I think that everyone should be investing for cash flow. How much do you need to live every month? 5,000, 10,000, 15,000. Okay, go get 15,000 or whatever that number is, $5,000 a month of cash flow. So take some of those crypto profits, go get some cash flow. And then regardless of what happens with your portfolio, you have enough income coming in to live off of, and you can wait till the market comes back up again. So that, to me, is the ultimate form of security. That should be everybody's goal, in my opinion. That's financial freedom. I have the right to work. I have the ability to work. I can work on what I want to, but I'm not forced to work. I don't have to work on stuff I don't want to. So I think everyone should take some of those crypto profits and build some cash flow.
That is a very mature answer for you, Mark. And listen, everybody, Mark's been sharing so much of his knowledge. You can definitely look up all of his amazing works on his amazing website. Actually, let me very quickly just again share the screen so that you can guys see that and confirm it with your own eyes. Such an amazing website. Okay, I'm actually subscribed to Mark's to the newsletter, on being part of a group that Mark has been having for some time, for some long time. He's running one of the most successful and respected YouTube channels as well, with so much more, so many more subscribers that I ever have probably. But guys, this is such an amazing honor and pleasure always to have Mark, every now and then on the show. So before we go and before we disconnect, I definitely want to appreciate your time, Mark. And I think because there are so many questions, guys, which we were not really able to cover. How about you throw some of them in our Discord, in the Congress channel, okay? And I'm going to take some of them, and either I or somehow perhaps Mark would be so kind to at one point just cover at least one or two questions very briefly later off the record, because I'm not sure, we have about 2-3 minutes left, so I don't really want to be pressing too much on time. Let's say if we were to give 1 minute answer, there is a question from Cristobal. Long-term macro perspective, how you see BTC as a store of value versus gold for institutions? BTC taking over monetary function from gold? If yes, how many decades? What is your take? 1 minute.
So the rapid fire answer is that when you talk about BTC as a store of value for gold for institutions, so most of the gold, I think about 3 trillion of that is really retail. The rest is central banks. So I think the central banks are going to hold on to that gold for a really long time. The 3 or 4 trillion that's more retail institution, I think will switch over faster. To this person's question, how many decades? Your grandparents probably won't ever buy Bitcoin, and your kids won't ever buy gold, and so it's kind of like a generational thing. I do believe it will. I think gold will probably stay around 2 trillion, but Bitcoin will surpass it, not necessarily drain gold to go up. And so I would say, when will Bitcoin flip gold? I think it could happen. Could happen inside of 5 years. Definitely within 10.
Amazing. That is a very good brief answer from you, Mark. And everybody, this is the final reminder to subscribe, take part in our giveaway, where you can find a link to this giveaway in the description to this video. Make sure to put your thumbs up, leave some comments and questions, and I'll be in contact with Mark, guys, to make sure he is part of our upcoming celebrations as well. More or less actively. But Mark, this has been such an amazing pleasure. I always am very moved and very excited to have you back. And this has been amazing pleasure to be hosting this session with CryptoHerc and with you, Mark Moss, the legendary Mark Moss. Thank you for that.
Oh man, it's always a pleasure hanging out with you. I can't wait till we can actually hang out in person again. That's going to be amazing. Hopefully that day will come soon. But thanks so much for having me on.
Let's make it Vegas or Puerto Rico. Let's pick it. Let's make sure it happens. Amazing.
I'll be here in Puerto Rico.
Yeah, I'll come by. You never know. Everybody, thank you for the show. Let's go and move to the next show of our virtual 14-day free trading congress. This has been CryptoBirb and CryptoHerc for you serving and hosting this amazing show. Thank you and stay safe. God bless.
Bye-bye.